Good morning, everyone. Today we're going to go over Celsius Holdings, CELH stock. Currently selling at a $14.8 billion valuation, Celsius is now the best-selling energy drink on Amazon, ahead of Monster and Red Bull. They are also the #1 energy drink brand on Instacart, labeled as the fastest and largest growing brand on the platform. Let's go on and get started. So a couple things we're going to look at, earnings per share, total revenue, net income. We could talk about some of the cash flows and cash flow per share. So we'll go ahead and start with total revenue. 8 consecutive quarters of total revenue growth year over year. From the past year alone, you can see that the average growth rates is going to be around 80 to 100%. So that's a good sign. And when we take a look at earnings per share, pretty much for the past year of 2023, they've had huge growth rates. The most current earnings per share they posted was 31 cents compared to negative 82 cents in September of 2022. That is a 137% increase year over year. And the quarter before that, they had a 350% increase year over year. They posted 18 cents compared to 4 cents of June of 2022. So huge growth rates in total revenue and earnings per share for Celsius. So current quarterly earnings per share should be up a major percentage, at least 25 to 50%. As we could see here for the past year, they're growing more than 100%, 366%, 350%, and 137% respectively. The best companies and some of the fastest growing companies might show earnings up to 100% or more. So this is a good company to watch. Again, you want to watch both total revenue and earnings per share because you want the total revenue to be supporting the growth in earnings per share and vice versa. So when we take a look at net income down here, we could see that pretty much for the past year, they've had great net income growth. The most latest quarter, they posted $83.9 million in net income compared to negative $181.9 million. Now that is a big jump. So that is a 146% increase year over year. And if you take a look at the previous 2 quarters of 2023, 459% and 514% increase year over year, respectively. And you compare that to 2022, and you can kind of see they're losing a lot of money in around that 2022 area. The reason why they were losing a lot of money in 2022 compared to 2023 was because of the distribution change. So this is the latest transcript they posted in 2023. They talk about how the prior year losses were driven by termination expenses as we moved from their prior distribution network to the PepsiCo distribution system. Their net income was affected and some of their cash flows were affected during this whole change into the PepsiCo distribution system. As you can see now in 2023, they had huge improvements. So that move into the PepsiCo distribution system is definitely helping them a lot. So just from looking from some of the data that we just went over, this is a really well-run company. I'm going to go down over here to the cash and long-term debt. They currently have $760 million in cash with 0 long-term debt. So really well-run company. Not to make any assumptions, but Celsius will probably post a strong fourth quarter, closing out 2023 with higher revenues and earnings at the same time. So with the new partnership with Pepsi, they are pretty much the primary distributor of Celsius now, and it contributed a lot to the recent top-line growth. So going back to the yearly data, compared to 2022, they're up 75% year over year. And the past 2 years before that, they're up over 100%. Huge growth in sales year over year. And it doesn't look like they're slowing down anytime soon with all this new partnerships and growth into the international markets. With the partnership with Pepsi, they should continue to help open new doors and new revenue sources. They are also planning to expand to the international markets, and they're going to use Pepsi to help them out. They're going to go to Canada, and they are expected to launch in Canada the first quarter of 2024. So besides spreading the availability of the products to different regions, the company is also focusing on launching new product lines. So they have a bunch of these Celsius on the go, a bunch of new products coming out. Celsius stock does offer worthwhile appreciation over the coming 18 months. There's definitely going to be a lot of volatility with this stock. If you do decide to purchase Celsius, it definitely is a good buy, but you are buying it at the all-time high. I think the best way to invest in this stock is to sort of dollar cost average it, because it will probably drop back down to around the 40-50 range. And you don't want to put all your money buying it at the all-time high. All right, and that's it. Just a little quick video. Let me know what you guys think about Celsius Holdings. I think this is a great company to keep your eye on. Again, you are buying it at the all-time high, but this company might just be worth it paying for a higher price. They have one of the biggest distributors in the world as their partner now, PepsiCo. Yeah, this is a great growth company to watch, guys. So let me know what you guys think. Thanks for watching. Don't forget to subscribe.